Good morning, everybody. Welcome to the morning call. I am Evan Lazarus, Chief Knowledge Officer here at T3 Live, but you can call me Laz. And I'm filling in for Scott today, who's out. So let's hop into it. I want to start and I want to talk about making things simple. One of the things that we always teach in our education programs here is simplicity. Trading is a very, very difficult business as it is. And I think the harder you make it, the harder essentially it becomes. I'm very much a believer that you have to go after easy money. If you're not sure what easy money looks like, and again, I use that phrase very, very sort of cautiously because there's really no such thing as easy money. But in the business of trading, you have to learn to look for high probability setups. You have to know when the balance of power is generally in your favor versus going after harder money. So I want to give, before we get into the charts, I want to talk about the off the charts product that many of you get on a nightly basis. And I'm going to bring it up here on the screen for you to take a look at. This is last night's off the charts, and it does a really, really great job of highlighting not only market direction and technical technical structure, but it really gives you some really like I said, low-hanging fruit, easy money situations. Here's the situation they had been identifying in IBM and ISRG and Qualcomm. And again, I'm not going to go through all of them, but I think the research team for T3 Live that puts this nightly newsletter together is doing an outstanding job, and it can definitively make your trading day a whole lot easier because you're focusing on areas where breakouts potentially can occur. So I know myself, I use it all the time, and it helps me navigate my trading day tremendously because I know I'm focusing on high probability situations. That being said, let's take a look at the market and let's look at the S&Ps, and we're going to do a random walk around Wall Street a little bit. We're going to start with the S&Ps, which we all know has been in this very, very tight uptrend channel. Really no stopping it for that matter. We've seen a nice break of a base up here. We saw this the S&Ps rally into the 1350 area for the last 5, 6, 7 trading days or so. We got a nice sideways consolidation here. We've since broken above. I'll make it a little bit bigger. We've since broken above, and again holding the upper range here and looking like, again, we want to go higher. So nothing really stopping this here. We can look back in time. We do have to acknowledge the fact that we are back at those what I believe was the Bin Laden highs, which were back here back in April, I think, when the Bin Laden news came out. So we have to respect that. We're into an area where there's a lot of prior resistance. So it could be a little more difficult to get through this prior high. So acknowledge the fact that we are into an area where we did see selling occur pretty substantially many months ago. So we are acknowledging that we are into an area of resistance, but we do have to respect what's happening right now. Right now we have strength. Right now we have a nice trend in place, holding our 8-period moving average. You can see that blue line. Every pullback, even the last couple of days, again, 2-day pullback into the average, buyers stepping back in. So consistent buying on every dip here in this market. Let's take a look at a shorter view, or a shorter term view. This is basically a 15-minute, or what I use is a 13-minute chart. The short-term view, we broke above this micro area of resistance yesterday afternoon. This to me could be a little bit of a an inverse head and shoulders for those short-term technicians. This being the left shoulder, down here being the bottom of the head, and again this being the right shoulder, could give us another move roughly about that distance. I know this is what we call cocktail table napkin technicals, but again, very, very useful because it can help put you, for those of you that are looking to capture short-term movement, day traders, short-term traders, you can identify what should now be areas of support and potential target zones of where this market might be headed in the short term. Let's go back a little further. Let's look at the intermediate term. I'm going to remove these lines just to get an idea of sort of short-term and intermediate-term time frames here. Little bit of upper boundary, let's call it. We have this rising upper band of resistance. We can see multiple touches As we are, slowly going higher, we can identify, these short-term areas. We also have potentially this lower band down here. A little bit of a rising wedge. We could, like I say, see a pop into that 1370, 13 area, but be mindful of this upper band, as that could pose that intermediate term resistance here as we go back basically a month here, and we can identify the slow grind of this move and where short-term resistance is. So we're looking at two different segments here: the short-term, the short-term relative to, again, the intermediate term, by opening up our time frames and looking back a little bit. So that's my thoughts on the market there and where I think we can go, again, both short-term and intermediate term. Let's take a look at some individual symbols. We're going to go to some daily charts here. The first symbol I want to look at is IBM. IBM is the Dow's largest component. On my Twitter feed a few days ago, I talked about how the Bollinger Bands, which aren't shown here, which are constricting. I can pop those on just to give you an idea of what we were talking about. You can see in this area right here, you can see how these two bands, this upper band and this lower band, constricted and got real tight. That's a signal that it's like a coiled spring, and the coil was compressing. And when we see those bands compress, we can expect some sort of large movement, and that's exactly what happened here. We broke out of this high level consolidation that the T3 Live off the charts team had talked about in the newsletter a few days back. So we got that big breakout in IBM. IBM is obviously the Dow's largest component. So when we see IBM breaking out like that, we know the Dow is probably going to have a nice big up move. So IBM breaking out now out of the bands. You don't want to chase this kind of thing. Maybe a 1 to 2 day consolidation here before we can step back in and maybe get another up move. So IBM, definitely something to watch breaking out there. Goldman Sachs, definitely a little bit of a tougher trade, flirting with resistance. Let's take a look here. We have this resistance level going back as far as August, then again in October, and back into that area that's right around 117, 118. We'll zoom in a little bit here. Starting to, build this upper consolidation area. I think a trade through this resistance level, like I said, around 118, could provide some higher prices here. So let's take a look. Definitely want to wait on this. You want to see momentum come in. You want to see volume come in. But we are watching Goldman for higher prices here on a breakout above prior resistance area. We do have to be respectful of this resistance zone. We did see sellers come in back here in November, push the stock back down. And we are hovering in here, which is good. We're building energy, essentially. The longer we can consolidate here, the more likely we are to eventually get through that resistance zone. Triple M, 3M. Very much like an IBM, not as high of a beta, doesn't have as much momentum there, but building this high level channel. Keep an eye on 3M for a breakout above that upper band at right around 88 bucks. Caterpillar. Taking a look here. Caterpillar essentially looks like the S&Ps a little bit, and I'll explain what I mean by that. We got a break above resistance. We're going to call this level resistance. You can see we got through that 114 half area about 2 days ago. So, sitting on top of a breakout, essentially. Let me move this line down just a little slightly. There we go. So now you've had these, 3 days of overlapping bars, really no sellers. Yeah, now you're flirting with another micro level of resistance. It's right around 116.50. So keep an eye on Caterpillar above 116.50, as that could, prove to be another area for a launch higher. So like I said, high probability situations. Look for stocks that are trading with the trend, consolidating, building bases, and eventually most of them in time seem to be launching from those bases. Going over to some other sectors, I know in the Off the Charts newsletter we talked about cloud computing and CRM. A leader in that area, trying to break out from this pullback. Saw a nice rise in price here. Flirted yesterday with breaking out. We did actually get above that downtrend line or that pullback. So a nice 5-day pullback here into the moving average. We saw some buyers step in. Volume came up yesterday. So keep an eye on some of those symbols. VMW, another name in that area. And again, just holding that 8-period moving average. Let me take the Bollingers off here. Again, so we're looking at price, just riding higher, and stocks to watch. Definitely into an area of prior resistance up here, but looks very, very good. Very controlled, 2-3 bar pullback here into a rising moving average, and bought yesterday. So that's a sign of strength, and that looks like a stock that potentially can go higher. And lastly, let's take a look at the market darling Apple, everybody in the world's favorite stock. I think, you have to stay with the trend here. I personally put on a tier 1 short here just for transparency. The reason being is that you have this big topping candle, big topping tail, heavy volume. I like to initiate trades into bottoming tails and topping tails. I think they provide formidable low-risk trades. Again, this is tier 1. I'm certainly not suggesting it as a trade, but for sake of transparency, I am involved in a small short here. So I am cautiously trading this stock. Right now, the trend is still up. You can see that pullback into the rising average, and we've bounced back pretty substantially. Yesterday, we saw some selling take place at the 78% retracement. We'll take a look at the 30-minute chart just to get an idea of what I'm talking about. Well, Laz, what are you talking about? I'm talking about retracements. Put it up here. So we measure, where that big, from last week, I believe it was last week, that big sell-off occurred. We saw that impulsive down move. I like to initiate trades on 78% snapbacks. We saw that price yesterday. Yesterday afternoon, we hit that level. It was right around 518, maybe a stone's throw under it. And we saw, a nice $8 pullback, but the market was resilient and the stock came marching back. So definitely flirting with an area over here where I think there could be, a little bit of selling and a little bit of that push-pull. If it can clearly get through this 518 to 520 area, you could very well see new highs. So I'm cautiously optimistic here, which is why I'm tier 1 short, because I do think that there is a low-risk potential trade developing here. But again, right now, the market and the stock hasn't shown that. So keep an eye on that one at that level. As again, this has had a very, very large move and could be ready for some sort of larger pullback potentially. And again, we saw that impulse selling. So be very, very careful if you're going to trade this stock, as there is just a lot of eyeballs and a lot of energy and a lot of kinetic movement here. It is a very momentum-oriented type of trade. So if that doesn't fit your risk tolerances or parameters, stay away from it. That being said, like I said, a little random walk down Wall Street. Friday morning, it's been a strong week. The market continues to hold in each and every day. Not a lot of momentum or impulse in the broader markets, but you have to respect the trend. Not necessarily the best intraday trading environment right now, but definitely a trending environment. So focus on those breakouts, as that really is where the money flow is and that's where money's being made. As always, I'm Laz. Have a great day trading, and I'll talk to you on the VTF in just a bit.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.